Yeah, I think it is. I mean, look, what's really happening to the bond market is that the 10-year yield, the 30-year yield are going up. The 2-year yield is staying relatively unchanged. That's another way of saying that really what's happening is that the yield curve is steepening. So the spread between the 10-year yield and the 2-year yield is starting to widen. And that's because the market is building in this excess term premia or risk premia for a lot of these, volatile, uncertain comments that, could be spooking the markets right now. So I think it's really important to understand which yields are moving and which yields are not. So people like to relate this back to the Fed. So the front end is really what tracks Fed policy. So as far as that goes, the Fed is on track to continue to cut rates. Yes, the minutes came out today and it shows that the Fed wants to slow the pace of rate cuts, but that they're still cutting. But the back end, though, is basically not playing along because it fears that there could be some higher inflation impulse based on some of these tariffs that may or may not actually come through.
Jim, so what does this mean for payrolls on Friday? And is that going to be the icing on the cake in terms of a move higher, continuation of this move higher in yields? Or do you think the market is inclined to look through a hotter number there, given the seasonal distortions and all the holidays, quite frankly, in the month of December?
Yeah, I think that's right. I think that's a very good point, that there are a lot of seasonal distortions. There's a lot of day count distortions. The holidays do wreak havoc with the data. So I think the markets are going to try to look through this. The bottom line, though, is that when we look at the jobs market, just in general, even if we look at the job openings and labor turnover survey, what we call the JOLTS survey, that was actually strong. That came out earlier this week, and that was relatively strong. Continuing claims, as Rick Santelli was just saying, that might be polluted by some of the holidays and things of that nature. But look, when you see the jobs market and when you see consumption and spending by many of the consumers, it's still relatively strong. Now, look, the jobs market is starting to weaken, but I would say marginally, only at the margin. So the number that comes out on Friday in the U.S. is likely to be looked through a little bit based on all these seasonal distortions. And I really think that the political dynamics around tariffs and immigration and things like that actually have a much, much, much bigger impulse than just this payroll number.